Good evening, everybody. It's 6:30, so welcome to Audit and Accounts Committee on the 30th of September. I will just read out the fire evacuation procedures. There are no fire alarms scheduled for this evening. Therefore, if the alarm sounds, please evacuate the building immediately. The fire exit is located at the side of this room. Exit through reception and meet in War Memorial Park. This meeting is being webcast live on the internet and will be available to view on YouTube after the meeting. And can I just remind you with microphones that in order to be heard clearly within the room by those present and on the webcast, you must speak directly into your microphone. The microphone stem can be moved so that it's as close to your mouth as possible. Finally, on mobile phones, can you please switch off your mobile phone or turn to silent? All done. Right, item 1. Apologies for absence and substitutions. I have received apologies from Councillors Katecha and Councillor Isaac. We don't have any substitutes tonight, and I think everyone else is here, so no more apologies. Item 2, declarations of interest. Are there any declarations of interest? I'm not seeing any, so we'll move on to item 3. Are there any urgent matters? Again, I'm not seeing any, so we'll move on to item 4. The minutes of the meeting held on the 29th of July 24. Is the committee happy that the minutes of the meeting held on 29 July 2024 are an accurate record? I'm getting lots of nods. Is that agreed? Yeah. Agreed. Fantastic. If you just bear with me while I initial and ink the minutes. If we move on to item 5, the internal audit progress report, I'm going to ask Officer Richard Bevan, to introduce the report.
Thank you, Chair. So this is the progress report for the work of the internal audit team, work we did between July and September this year, and also the current position with outstanding audit recommendations as in the middle of this month, about the 16th. So the audit's completed. The table in paragraph 3.1 on page 12 of the report shows the one completed audit where we gave a reasonable assurance, and that full report is shown as Appendix 1 to my report. Then there's a table in paragraph 3.2 on page 13 which shows the other audits that we completed, which we gave full or substantial assurance, 6 in total. And these 4 audits, just the key points I've included of note for those audits rather than attach them as a full report. There is a link on the report to our SharePoint page if you were of a mind to wish to read through all the reports. They're there for your pleasure. Then with recommendations, paragraph 4.1 summarises the position of outstanding audit recommendations. So Appendix 2 shows all those that are overdue for completion, and Appendix 3 shows the ones that aren't yet overdue. And you'll see in the end column there is a current progress report from the relevant head of service on those recommendations. So nothing else to add, just present the report for the committee to comment on, please.
Thank you, Richard. This is I think the second report we've had in this format, where we try to focus the committee's efforts on the main report that's come forward there, where assurance has shifted from substantial to, I'm going to get it wrong now, substantial to reasonable, I think it was, and with the focus on the overdue recommendations from previous reports. I'll take questions from the floor if any councillors have any questions. I'm not seeing any questions. It looks like it might be a quick evening tonight. I'll give you a minute, Councillor Tustain. Councillor Tustain.
think it's in the appendix. I wondered about the we've got overdue recommendations. I wondered what the blockers are and how this will be addressed, because we don't really have any indication in the report. We sort of just say these are overdue, and then that's it, really.
Richard?
You mean there's no particular blockers as such? It's just the head of service has provided an update to show that work is progressing. It's just not progressing as per the original agreed completion date. We don't have any particular concerns, reservations. We know the work is being done. So there's no external other blockers, so to speak, as you put it.
Any other questions or observations? I would just add that we now get the original date in there with the revised date listed, which this committee's asked for before, which I think helps us to understand how that's moved or what the position is. I think we're getting pretty good comments through from the officers concerned, and certainly when I was talking to Richard and Paul earlier, they were more confident that they're getting better and more regular updates from officers on some of these overdue items. So I think the direction of travel is good.
We'll just add that the chase that we do for the recommendations, it's not reactive. We don't wait until the actual completion date is upon us. We do chase on a regular basis. So we now have good dialogue with most of the heads of service, or all the heads of service really, for progress. Hence the more comprehensive end column of my appendices there, which I think is probably the best that we've had in the time that I've been here. So we're confident work is being done.
And I think from a committee perspective, we have the same themes that we've been seeing for the last 2 or 3 meetings, which is, I think, a shrinking number of IT ones, but still some IT and cyber ones on there. A growing list for the head of HR and organisational development at the moment, but I'm fairly confident she's working through those. And the business continuity ones, for which we have a new business continuity committee that's been established to take that forward and address some of the, for lack of a better word, blockages there or the delays there. If there are no other questions, I'm going to ask the committee to note that it's considered that report and its contents, I would say ratify it, but are we allowed to ratify it? We've considered and noted the report. We agreed? Thank you. We'll move on to agenda item 6, which is the review of the corporate risk register. I'm going to ask Paul Gundry to introduce the report.
Thank you, Chair. This report presents the current position of the corporate risk registers to the committee. It's the usual format for those who have been on the committee previously. Also includes a diagrammatic version of the corporate risk register, page 48, paragraph 2.3, so that gives you a good visual. Just wanted to point out there's been no changes to any of the corporate risk register scores since the March report that was presented to committee. That's highlighted in paragraph 2.2, page 43. Say 43, yeah, I think it's 43. Or might be 48, sorry, apologies. But there's just one other thing I wanted to highlight to the committee, and that's that the Senior Leadership Risk Management Champion is now the Head of Law and Governance Monitoring Officer, and that's highlighted in paragraph 4.1 on page 49. Wasn't going to add anything else to that, Chair, so just ask for the committee to consider the report, please.
Thank you, Paul. I will open up to the committee to see if anyone has any questions or comments. I'm not seeing any. I think we're into a fairly regular rhythm now with the corporate risk register, and it's well looked at by the senior leadership team and well reported in this report. So I will move that from the chair. The committee notes that report and it's considered and commented on, is happy with the contents of the report. I'm getting lots of nods, so we'll consider that one done as well. We'll move on to item 7, please, which is the Treasury Management 2024-25 Quarter 1 report. I'll ask Adam Swain to introduce the report, please, Adam.
Thank you, Chair. So this is the update at the end of quarter one at 30th of June 2024. Main points to draw to your attention are that we forecast Treasury Management income to be 5.6 million for the year, with a forecast rate of return of 4.36, which is on budget. Slight improvement in performance in quarter one, with the return being 4.63%, which set out in section 5. But with rates coming down, we expect to be aligned to the budgeted position. Only other thing to note is in section 9, we highlight the fact that this report obviously covers up to the period at the end of June, but in September the Bank of England reduced base rates to 5% from 5.25%. Which was already taken into account in our forecast, but we've noted that there. And also, as had previously been part of our strategy, we've disposed of 2 bonds, and a third is in the process of being disposed of at the moment, with the funds being reinvested in supranational bonds or gilts, to give a sort of fixed rate of return over the next couple of years, aligned with the planned capital programme and the needs of funds. So that's aimed to kind of stabilise the rates of return in a falling interest rate environment, and is part of our kind of strategy to move away from bonds into sort of the gilts that are a little bit longer term but a bit more stable in terms of income. That was all I was going to cover, but I'm happy to take any questions.
Councillor Tustain.
Thank you, Chair. Chart 4, I should say, indicates that we've actually got a slightly lower return. We obviously have moved, I think, and doing quite well. We've got lower credit risk though. But based on this, I wondered, and this is something sort of seems to keep coming up with Basingstoke, and I know we are obviously in a strong financial position, and I think there is always this reconsideration every so often. We say, are we a little bit too risk averse?
I think it's the pertinent question.
Yeah, so the chart 4 is a new one, as from our new Treasury Management Advisor Link, who obviously did the training earlier. As is indicated there, obviously we do have to think about the security then liquidity then yield in that order, as we've mentioned previously. The performance is aligned really in terms of the rate of return we're actually getting compared to others. Some of this is kind of due to the short-term nature of our holdings, and actually, as I've just mentioned, moving into sort of slightly longer-term holdings with a return, I think we will see that actually our performance will slightly shift up. But I think actually we're generating income of around base rate at the moment, so actually we're doing reasonably well, while balancing that risk of kind of having liquidity and the security there. So it is a balance, and yeah, I take the point that we try and make sure we're maximising what we can within the approved strategies. Obviously, we'll revisit them and bring those back to the committee in January, along with the wider sort of investment strategies and other strategies that go to council in February. So happy to take any kind of feedback at that point as well, to consider if there are areas. But we do have these discussions with our Treasury Management Advisors to make sure we're maximising returns while trying to make sure that our public money is well invested and safe and secure.
Councillor Minsbound.
Just an observation, because of course actually what would be really useful was for us to spend a little bit more time understanding where all the dots are there, because of course it could be those with the highest risk have ended up with the lowest appetite. We might not know that. And that's the thing, isn't it? If we suddenly find out the people at the top and the people at the bottom, and there's more people at the bottom that have taken a similar view about risk. But I think that's the problem, isn't it? It's all very well having a pictogram like that. So, look, we're in the middle. And I can understand why, particularly in your role, Adam, you might be quite comfortable with that. But actually understanding that in a bit more detail might be something we could spend some time on, Chair.
I'm open to suggestions about how we do that, Adam, and or if Link have got a perspective on that. I know that when we've had these sort of scatter charts before, we have been at the higher end of returns. Certainly in a rising interest rate environment, we were at the higher end of returns. for a lower end of risk than others were taking. So we were we were outperforming, and now we are in line with performance. So I mean, I'm not concerned, but I take Simon's point.
And I think some of this might be an interpretation of what this is telling us as well, and it's new. So perhaps I can go back and for the next committee and the next report, we can add a bit more context to it so that we understand it. Because it's a new presentation; it's slightly different to the formats you've seen before, and the benchmarking they do is different groups. So that might be the reason why it looks a bit different. But yeah, I'm more than happy to go away and provide a bit more context next time, and then hopefully if that answers your questions. If not, we can see what else we can do.
I think the other question in my mind about that is, what? Obviously, we've got our investment policy, which sets out the things or the instruments that we can invest in, and I'm just curious as to what else is further up the risk scale that we're not considering, and I'm sure we're not considering it for perfectly good reasons, but that there's a very wide and complex universe of bonds and credit, and it's for people like Link to advise us on that.
If I can just add, Chair, obviously with the divestment from the bonds, we looked at where to put it, and actually gilts and supranational bonds were giving us a very good rate of return, managing that risk. They're AAA rated. And that was the best kind of option. We discussed that with Janine from Link in quite some detail, and there wasn't anywhere else. So we are very cognizant of the fact that we do want to try and maximise that return, because it's important that we are generating the revenue from our investments within the parameters that are set, and we do look to see where it is. Let's say the first investment we made were in gilts, and that'll be reflected in the next report, obviously. But the rates for the slightly shorter term investments were a lot lower, so we looked elsewhere, and that hence going for supranationals. So we do really try and actively manage it, and in kind of previous environments, actually putting it in cash and money market funds has been better, because actually they've been paying the best. But we are obviously keeping an eye on that, and it's tricky with the rates coming down. We're just trying to manage that risk as well, so that we keep the revenue up for as long as possible.
Thank you, Adam. Are there any other questions on this report? Councillor Tustin.
Thank you, Chair. I was just wondering actually whether we are reviewing. Have we reviewed the ESG strategy?
That comes forward as part of the annual investment policy paper, I believe. I'm sure Adam can give you more information on it. But we have we had a paper come forward which scored every single one of our. In fact, it may still be attached. It's there. It's attached to Appendix 1. So if you look at Appendix 1 on page 85, in the far right-hand column, it tells us which of our investments fit within our particular chosen. I don't say benchmark. That's not quite the right word, but our ESG measure, and it's the government stuff that's not measured, which is the nose. But Adam, you've got a view on that?
It's partly just because they don't have an ESG rate like policy in the same way. Obviously, the government will have its own climate change policies and those commitments as well. But for what we're looking for here in terms of the investment, the Debt Management Office and the Treasury don't have a specific ESG policy, which is what this is trying to reflect. I think again, as was indicated in the training, it's very difficult with ESG because there's not a consistent scoring, and there's a different approach. There is work obviously for reporting on ESG matters, but until there's a consistent kind of benchmarking and those sort of things, it's very difficult. We do try and make sure that we present something. It's not perfect, I understand, but we keep that under review. But yeah, as the chair said, it is part of the Treasury Management Investment Strategy that came in January to this committee, into February and to council, and it will come again beginning of next year.
Of course, that's also the time and the strategy that will consider the permitted risks within our investment portfolio in that respect. So that comes back to Councillor Minnis-Bound's question earlier as well. Does anyone else have any questions? Richard Harwood.
just a very minor point, really, but you don't invest in other local authorities at all. Is that a matter of policy? And is that stated somewhere, or is it just, I mean, it's high risk, let's face it, but nevertheless, at one time it was the safest investment you could have. But I just wondered if you'd taken that as a deliberate policy and it was stated to be a policy and you avoided them all like the plague.
It is in our strategy that we can invest with local authorities. We haven't. Quite frankly, some of the returns aren't high enough for the risk level there. We have had this discussion with Link, and they have indicated obviously they are meant to be low to no risk because they should be backed and we should receive money back. But say for the risk that at the moment I perceive as part of that, there hasn't been the differential compared to the money market funds or elsewhere, which are, or even with DMO, the rates have been comparable. So actually risk-free versus riskier, it made sense to stick with the risk-free rate effectively.
Thank you. If there are no more questions, I will ask the committee to, if it's happy to consider the contents of the Treasury Management Quarter 1 report and note its contents. We are. Thank you. If we can move on to Quarter 1 Annual Property Plan 2024-25. And here we have got used to having Councillor James come along, portfolio holder, to introduce. He's given his apologies tonight. So I think that's a first out of about 5 or 6. He had quite a good run. I will ask, we have a pink paper attached to this one. So I will ask committee to keep the discussion to the main white paper. And if you want discussing on the pink paper, we'll consider that at the end, and we'll have to go into private session to do that. That's the appendix. I think it's appendix 1. Just check. Yeah, appendix 1 is confidential paper. So I will ask Liz Surratt, to introduce the paper, please.
Thank you, Chair. I sort of trust that you've all read the report. The annual property plan for the current financial year was approved by Cabinet in February 2024. The core aims of the plan include generating improved sustainable revenue streams, enhancing the sustainability credentials of the portfolio, and disposal of underperforming assets. This report details the activity related to these objectives for the first quarter from the 1st of April to the 30th of June 2024. During 2023-24, the property portfolio generated a rental income of 18.9 million. This is forecast to increase to 19.8 million this year. And I'd just like to point out there is a typo on the first page of the report. The rent income forecast is 19.8 million rather than the 19.18 million that's sort of on that first page, but it's correctly shown in 2.2. And then I'd just like to highlight some key areas. Just to sort of paragraph 4 shows the considerable work that's been undertaken by officers to bring forward several properties which are targeted for disposal this year to generate a capital receipt, one of which is now on the market. More detail on these is included in the pink paper in Appendix 1. Paragraph rent, the rent reviews, 16 have been completed in this quarter and a further 8 lease renewals have been completed. So, good progress by the officers in the team. I'd also like to sort of highlight the aged debt in paragraph 8, which sets out the progress made, which has decreased from 725,000 to which was actually 1.77 million for this time last year. And then in relation to our vacant properties, the council's vacancy rate is relatively low compared to this size or to other similar size portfolios. There are 13 vacant properties at the moment, 5 of which are under offer, and 6 others have had work being undertaken them to include improvements to lighting and insulation to improve their EPCs before they're marketed. And also, as requested at the last committee, I think more detail was asked for in relation to sustainability and progress on the community centre leases, so we've provided an update in this. The committee is requested to consider and comment on the report.
Thank you, Liz. I will open it up to the floor for councillors for questions or comments. Councillor Meanspound.
I've got a question, and I'm not going to talk about the pink papers, it's about what's in the white papers. And I'm just really conscious that there is something that talks about disposals. And I just wanted to be really clear about ensuring that we've got some really good oversight and confidence in the documentation, if I may, Chair. Because I suppose I'm concerned that on the same day as I received these papers, there was a public media disclosure about a property in our ownership, about it being disposed, with a value against it. It does not appear in these papers. It has never appeared in these papers. And I question what that means for our proper oversight and confidence if these papers do not correctly reflect the business of this council. I don't believe that's a question for officers. I believe that's a question for the portfolio holder, and I believe we should ask the portfolio holder for a response to that.
Adam, you've got a view, or were you?
Sorry.
Sorry, or any other councillors got a view on that? I believe you're talking about this rumour about us selling this building for £2.5 million.
I just think we need to be clear. It's more than a rumour. It's articulated on a council website, which the council runs and operates, with an articulation of what it could be offered for and a price against it. And it's not on the disposal list.
Can I just clarify there? The price quoted in the press last week is based on the book value from our accounts at 31st of March. It's not based on a market value or anything like that. I don't believe it's being marketed at the moment, but that value is based on an existing use value, so it's not, as an operational building, it's not based on a market value. So that value is not correct, and that was communicated to the media organisation that value is based on the accounts, but that is a value we have for this building, but it is purely on it being an operational asset and continue to be an operational asset.
If I may, Chair.
Yeah, sorry. So that's down to it. Just if I can clarify it before, Simon. So that's down to the Red Book rules, or the surveyor's rules, and the accounting rules around how you disclose the value of a building in a set of accounts. It's not a market value, and the two are in many circumstances, and in this circumstance, very different. Is that correct? Okay, Councillor Bound.
If I may, without going into the pink papers, we don't get values articulated to us either. We just get articulated that they're on a list to be disposed of, and actually, clearly, conversations about disposal go on for a long period of time, and this appeared and made us all aware that it's on the council website at the same time these papers were made public, exactly the same day. I'm sure it had been on that website for some time. I think we should ask the portfolio holder for a response to that.
That's fine. I'm just wondering whether that's fine. I'm just wondering whether it's the business of this committee or whether it's a question for full council, Simon.
I suppose my point is we're asked to comment, and this is our first opportunity as elected members who are supposed to provide the oversight and confidence. And actually, that would be my comment. We get the documents at the same time we're made aware.
No, that's fine. I wasn't aware it was on a council website. I was curious as to where the journalist got it from.
If you look at the Invest in Basingstoke, which is operated and published by this council, that's where it comes from.
So why don't you and I pick up outside of this meeting, and we'll write to the portfolio holder together and ask for some clarity on that. Is that okay?
Yeah.
Great.
That's fine. Thank you.
Any other questions from anybody on the property paper? I'm not seeing any. I raise this every now and again about the volume of papers that we get to come to this committee. It's apart from the issue that Councillor Meanspound just raised. I'm just curious as to whether we think there's enough happens on a quarterly basis in property, or whether we would benefit from moving to 6 monthly reports, and perhaps getting more detail and or more to talk about on a 6 monthly basis, with officers giving us almost a reporting by exception in Q1 and Q3. I talked to officers about it earlier, and I think that it would free up some of their time to focus on some of the lease renewals and some of the rent collection and some of the rent renegotiations and so on, and make better use of their operational time. I don't know what other people think. Councillor Minsberg.
I'm quite happy to support that. I'm just acutely aware, typically in property, you go for months and months and nothing happens and there's a big flurry of activity. So no matter when we had to report the frequency, we're sort of going to miss it. So actually, I absolutely think you just manage to work
that's
there would be
absolutely
great.
the point. That they're like buses; they can all come along at once. Councillor Tustain.
Yeah, actually, I have to confess, I sort of have been skimming through this, just catching up with everything. And something that actually just jumped out at me that I'm a little concerned about is the portfolio values decline by minus 7.1% over 12 months to March 24. It's 13.1 on page 97. And I just wondered whether there's any sort of feedback on that one, because obviously if our portfolio is declining, then that's obviously of concern, and especially if we've got empty buildings and with the sort of the downturn with the office and retail market, which has been indicated in the report as well.
I don't know if you want to cover that one, Sue, or Liz, sorry.
I was just trying to find the section.
Page 97, section 13.1. That's a good catch, Jackie. I hadn't noticed that. Yeah, Adam, if you have a view, fantastic.
Again, I'll let Liz or Martin correct me if here, but I think obviously our investment property portfolio is valued on a annual basis as part of the accounts process. We had change in valuers this year, so there's a bit of a change there sometimes, because obviously different valuation firms will have different views, and prices will fluctuate in the market. The value of it is only a concern when you actually come to realise it, as I've probably said many a time before. So yes, there was a decline there in the value, but again, some of that will be down to a change in valuer, some of it will be down to market conditions as well. But as with other properties within the property investment strategy, they're there for the longer term, and we're not planning to dispose of it at regular points. So it is obviously looks big and there's a concern, and completely understand the question there, but part of it will be a factor of just when the valuations are done and how the market's performing, and also I think for some of this it might also depend on when rent reviews and stuff take place as well, because obviously that has an impact on the value as well, because as you approach those, the value can have a bit of an impact there as they kind of get reset. So I will let Liz and Martin come in if there's anything more, but that's just my input.
Hi. Yeah, the other thing I'd point out is the underlying revenue of the portfolio is on an upward trajectory as well. The values did go down as interest rates went up, and there's a real correlation between those two. And I expect next year, subject to other market conditions, that values will gradually increase. So I don't think there's anything fundamental underlying the decrease other than the change in values.
Thank you, Martin. I would just add as well, I don't see what else we would do in that circumstance other than bring forward the review of the strategy. And that's what this committee asked for at the end of the last meeting, over a sort of a property-related point, but not directly related to that. So I think the council's doing the right thing, and I think this committee recommended the right thing. But thanks for drawing attention to it, Jackie. Just to come back to the last point then, do we have consensus that we are happy to receive a 6-monthly property report? Yeah. Great. So I think we'll still get the H1 report, or Q2 report, whichever we want to call it, in November. But we will have one less paper in January, which when we get to the work programme, I think you'll see that you'll see the benefits of that. Thank you, committee. On that basis, then I will. I think we've covered off the main public paper. Oh, Councillor Tustain.
I think what might be useful in this paper is seeing a bit of a history on where the property values are and where the revenue coming in from property is, because I think then that will give us a level of confidence that we're still on the right track.
So if you can take that away, and we can have a couple of graphs on that can go into the new less frequent report, but with slightly more information. Thank you. I'll just ask if there's anything anyone wants to discuss in the pink paper, and if not, we won't have to go into closed session. But if anyone's got any questions on Appendix 1, now is the time to speak. I'm not seeing anyone there, so thank you. So I'll ask the committee to agree to consider and note the contents of the report, which I think we've done. So thank you. Thank you, Liz. Thank you, Martin. You can leave if you wish, but I think we're going to be done in a few minutes anyway. We'll move on to item 9, which is the accounts audit and accounts work programme. You will see here that in November we have, there's actually a typo in the top there, it's the 22-23 accounts and disclaimed audit opinion coming forward in November. The government has finally given us guidance on what they call a backstop date, which is a date by which we need to have signed off 2022-23. That date is close to Christmas. So our meeting on the 25th of November will be looking to approve or receive, I think is the key phrase, receive that set of accounts and that disclaimed audit report. You'll recall we've talked before about what a disclaimed audit report means and what that is coming forward. We'll cover it again on the night, I'm sure. But so that's the big item of business for November. Fraud update, protecting the public purse, another internal audit progress report, the Q2 annual property plan, and the Q2 or mid-year Treasury Management Report will also come to November. So that will be a longer meeting in November. There's a discussion to be had about, I think we might even be ready with the 23-24 accounts. So we may be in a situation where we have 2 years to sign off in one meeting. I'm not entirely comfortable with that yet. But Adam and I are going to discuss that in a bit more detail. Yeah, it does feel a little bit like overload, doesn't it? Yeah, that was my reaction. Okay, that's good to get the feedback. Might break the printer, yes. Yeah. And then looking at January, that's the plan for bringing forward 23-24. That's the original plan for bringing forward 23-24 to this committee. And we'll also have the draft capital investment strategy and the draft treasury management strategy, the housing benefit certification, and the draft annual property plan. So a big meeting in January as well. And then on to March, the internal audit plan, the internal audit progress report, and the annual review of the corporate risk register. Q3 annual property plan won't be coming to that meeting now, and we'll have the Q3 treasury management report. So that's what the next 6 months look like. If anyone's got any observations or comments on that, we don't have any more training planned in, do we? So we'll be back to our normal start times of 6:30. It just leaves us to, unless anyone's got any questions over that, I'll move on to the final item, which is just the action tracking log at the back of the paper. This is where we try to capture things from the minutes to make sure that we don't drop anything between meetings, certainly items that tend to span more than one meeting, 2 or 3 meetings. So just looking there, item 1, the annual property plan year-end report. That's been covered off tonight, I believe, so that item's closed. Item 2, this was asking Councillor Tomlin, the Cabinet member, for an update on what the new EPC targets would be now that all of our buildings have met the EPC of E, I think it was the floor. And so that rather long answer, I think, distills to we will have new targets, but actually we're going to wait until the government give us their targets and then we'll probably align with those. And at the moment, they're speculating that might be a category of B, which is, I think, probably a grade higher than I was expecting. But so I think we can consider that item closed as well. And then item 3, annual property plan year-end report. This was Councillor Isaac's question on the community centre lease renewals. I think that's been covered in the property paper tonight. So I'll close that item as well, and I'm sure Councillor Isaac will raise it with me or bring it back to committee if he's not happy with what was in there. And then item 4, this was a written update on business continuity progress from the Director of Customers Digital Improvement. Now, that's covered in the internal audit report tonight. I got a reply from Katie Salis quite quickly after the last meeting, which covered it. I didn't share it more widely. It was fairly straightforward, and she was very clear that it was being dealt with. So I'm happy that that one's closed as well. And then item 5 was I think your question, Councillor Tustain, about whether or not in the internal audit papers we could draw out any themes, any common themes to make the stuff more digestible. This is almost an open and running question, I think, and the team have got that and are thinking along those lines. So it wasn't so much of an action, but a wish, if that makes sense. So I was planning to take that off the list as well. We'll have a couple of items on there from tonight's minutes, including our question to Councillor James. But I think that brings us to the end. Unless anyone's got any other business they want to raise. I think we're done. It's pub o'clock, as they say. I'll call the meeting closed at 7:11. 7:11, here we go. Thank you, everybody. That's very efficient tonight.